The top line for me, just having a look through the research, investors bearish growth and increasingly bearish growth. What's your takeaway?
Yeah, hi Jonathan, good to be with you. Indeed, I think the most striking thing this month is the decline in optimism on the global economy. It's at a 6-year low, the question on growth expectations globally, and that's also reflected in increasingly pessimistic view of the profit outlook. That's particularly the case outside the US. Expectations of US profits are much healthier, but that overall is feeding into a more cautious tone in the survey.
Ronan, just in terms of the tail risks, I noticed also that the overwhelming consensus is no longer just about trade. The tail risk, the up-and-coming tail risk, appears to be a Chinese slowdown. What do you make of that?
Yeah, it's interesting. The kind of pessimism around trade risk peaked a couple of months ago. It's still, cited as the biggest tail risk, but it has been receding, which I think reflects the fact that trade worries are better embedded in market sentiment. But you're right, Chinese growth is kind of moving up the ranking in terms of what people are worried about. I think that reflects the fact that growth has been slowing in China. I think there's interaction between these two as well, because a full-blown trade war, an extended trade war would be potentially damaging for the Chinese economy, and I think that's maybe the thing people are worried about that's less priced into markets potentially here.
Ronan, something I'm trying to figure out by just talking to fund managers and people on the buy side is just how stretched this decoupling theme has become, how one-way that trade has become, and how crowded the trade is right now. Just how crowded is that trade, the US continuing to decouple from the rest of the world?
Yeah, we think it's getting quite stretched. In the absence of a global recession, we're seeing the underperformance of non-US markets hitting relatively high levels, the worst since 2008. Sentiment metrics for emerging markets are also deteriorating quite materially, and in the survey today we see allocations to EM took a big fall at the lowest since early 2016 at the lows for emerging markets. Conversely, sentiment around the US is very, very upbeat. Like I said, profit expectations quite high, unlike in other regions, and the allocation to US equities is also at the highest in a number of years. So I think it's starting to become stretched. I think it could get more stretched if we went into a full-blown downturn. That's not our base case, and therefore we think it's going a bit too far now.
Ronan, it's not exactly euphoric in terms of how they're positioning in the United States. What comes up in the report, the survey, is long equities, yes, but also long cash. What do you make of that?
Yeah, I think overall it's a fairly cautious tone. The cash allocation is at 5.1%, which is above the 10-year average, which is 4.5%, and it has been rising in the last few months. Equity allocations are still positive, but have been falling. So, it is a pretty cautious tone. There's a preference for the US as a kind of higher growth, more defensive market, but overall, the sentiment of the surveys is becoming more and more cautious.
Ronan, I want to wrap it up with the contrarian trade that comes up in the survey, long EM versus the United States. What's the catalyst, and how brave do you have to be to put that on right now to see that materialise?
Well, I think what EM really needs is the dollar to stop going up, and we have seen some hint of that in the last couple of weeks. Our internal positioning data suggests longs in the dollar globally have really increased over the past 6 months. I think ultimately the kind of key political catalyst will be progress towards de-escalation of the trade war, and obviously there's this week we should see the announcement of the next round of tariffs on Chinese imports into the US. But I think if we see progress on talks, that will be a very important catalyst, and that's what we'll be watching for in the next month or two.